just starting to see that. It's not like the public even recognizes what's going on, because 30 means a lot to us, right? Because we follow the market, but 99% of people have no idea how much silver is, and if you told them, it wouldn't mean anything, right? Like, what do they have to do with it? So, we have a long way to go here, on the one hand, and on the other hand, maybe not so long.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on what has already been a rather exciting week in the gold and silver markets. Obviously, we did finally see silver break $30 back on Friday, and then eventful Sunday night session saw the price go over 32, then come back down in on Monday morning. And currently, as we're recording about 1 o'clock Monday afternoon Eastern time here, we do have silver, and I'll pull it up here real quickly before introducing two guests that I'm sure you're familiar with. But there we see gold at 24.29 and silver. Yes, that is a 32 in the beginning there. So as we had wondered for quite a while, when silver finally breaks 30, does it go through there? And sure did rather quickly. So fortunately, to dig into that and a whole bunch of other things affecting the gold and silver markets, I'm joined by Andy Schectman, our regular Tuesday guest here from Miles Franklin, and of course, Rafi Farber of the Endgame Investors. So Andy and Rafi, welcome on in. Andy, how are you today?
I am doing very well, Chris, and thanks for having me. It's an honor to be here with brother Rafi, and Rafi, it's nice to see you as well. I'm glad to be here with you both.
Well, good to
Me
have.
too, guys. I'm just glad to be alive.
Well, yeah, I hear it's certainly a volatile time in your section of the world, and perhaps we'll dig into that a little bit before we wrap up. Although, Rafi, been a while since you and I have done one of these, so we'll start with you. But as I mentioned, we did have silver go through 30. It went through 30 quickly, up to 32, and would love to hear your thoughts on what we've seen the past couple of months leading up to this, and perhaps where you think things stand now.
Well, what have we seen leading up to this? First of all, in terms of fundamentals, it's becoming clear that consumer prices are going to keep going up higher and higher and higher, and sometimes at different rates, but they're not going to stop going up. And with rates at what, 5.5% or whatever they are now. So if they're still going up at 5.5%, what's that interest rate where they'll stop? And the thing I keep emphasizing is that we might be at the point where there is no interest rate where consumer prices stop going up. Once you have the fiat system so heavily based on debt assets, right? If debt and currency are the opposite sides of the same coin, then the more currency you have, the more debt you have to have, since all the currency represents debt anyway. So once it's so saturated with debt, then when you bring down the value of debt, it's going to hurt the value of the currency rather than help it. And that's the paradigm shift that most people can't. It's hard to step into because it reverses thinking, and I think that's why silver is really going up. And again, it's not really going up. It's just the dollar going down. The silver is just a measure of how the message of the end of the dollar system is resonating with the public rather than with banks or with the rich people, right? Because they're not the ones who are going to buy silver and when they get nervous. It's going to be the public, and we're just starting to see that. It's not like the public even recognizes what's going on, because 30 means a lot to us, right? Because we follow the market, but 99% of people have no idea how much silver is, and if you told them, it wouldn't mean anything, right? Like, what do they have to do with it? So, we have a long way to go here, on the one hand, and on the other hand, maybe not so long. It's hard to tell now when things get this unstable.
Yeah.
Yeah, and Rafi, in a minute, we'll come back to obviously that you write and speak a lot about the end game and perhaps some of the things you're looking at and how close you think we might be to that. Although, Andy, I saw you nodding along in agreement as he was talking. And any thoughts on what you
Yeah.
there to move through 30?
Well, to Rafi's articulate point, yeah, we're a country addicted to spending, adding $1 trillion in debt every 100 days. Inflation is the symptom, not the driver. That's the bottom line. And our spending habits aren't going to change anytime soon. And so deficits will get bigger, interest rates will rise further. And, the term in economics, Gibson's paradox, which traditionally speaks to the inverse relationship between real interest rates and the price of gold in particular, in this case, seems to not be as relevant in an environment where gold and silver prices are not aligned with their usual drivers, in particular, the 10-year Treasury yield and strong dollar. Because as Vince will often say, they just want the metal. And I think India just wants the silver. China just wants the gold. Of course, I'm generalizing there. I think China is a big buyer in silver as well. But, you can, well, and let's say there's empirical evidence to that showing that in silver this morning in Shanghai, the market opened up, limit up, and opened up at $35.38 an ounce. But on the Shanghai Futures Exchange, it opened up 8% limit up on Monday morning. And so when you talk about the drivers that typically would spell a reversal in the price of gold, a strong dollar, strong interest rates, in this case, and an inflationary agenda that seems to be running out of control, which would speak to higher rates for longer, it doesn't matter. I think that's really what's different this time, is that the pursuit of non-dollar denominated liquidity is outpacing the demand for dollars in U.S. Treasuries.
Well, yes, we have seen that, and we've seen a lot of these things building for a long time. Although, Rafi, one of the things that you track are some of the developments in the banking and plumbing, which you have suggested you see us getting closer to the point where a lot of these things finally have to be dealt with. I found it interesting in the past couple of weeks, heard an increasing number of analysts suggest something similar, where we're to the point where you can't continue pushing it down the road like so many of us have watched for such a long time. But anything you could say about some of those things that have been building beneath the surface, and how close do you think we might be to a break point?
I don't. This is one of the hardest questions to answer, and if any of us knew the answer, like, we wouldn't be telling anybody, right? Um,
Although,
look,
Rafi, just
yeah,
one second, if I
yeah,
can interject, maybe not as much even the timing, but also some of the factors that are the ones driving that event forward that you often write and talk about.
right. So what is driving that event forward? Well, look, uh, if we look into the past, we've seen the same thing before, right? We've seen rising interest rates and rising consumer prices at the same time. Back then, the Keynesians called it stagflation. They made up a new word, and it contradicted their view of what economics even is. It wouldn't even seem to be possible, but it's happening. It's happening again. And why? Meaning, if you think about, really, why is it happening again? Why are interest rates going up and consumer prices continuing to rise? How does that happen at the same time? Well, if you think about what low interest rates do, right, they stimulate production. And even though we want to say, lower interest rates stimulates consumer prices, it also stimulates production of consumer goods, right? Because companies can go into more debt and they can invest more and they can increase their production, their capacity, etc. That's what booms do. So at the point when higher interest rates, right? At a certain point, higher interest rates, they affect supply, right? Why? Because higher interest rates are going to cause companies to have to pay back more in debt, so they can afford to invest less in production. But the lag between interest rates and how it affects production, it takes a while, right? So there's this lag, and then at some point, when you hit that point where the higher interest rates disturb production more than they disturb demand, you're going to have, like, you can't have people buying less food but you can have companies producing less food if they have more debt to pay back, right? That's where we are. So we have rising rates and rising consumer prices. And then when is the turn? How does that affect the turning point for metals? Because once people understand that it doesn't matter how much the Fed raises rates, it doesn't matter. They can't do anything anymore. So then they suddenly realize, oh, it's all in my own hands. So then what am I going to do? I'm not going to wait for the Fed to change monetary policy so my dollar can buy a little bit more or a little bit or die a little bit slower than it did 2 days ago. Right? Forget this. Like they're just going to go and get something real because they're panicking. And we don't know when exactly that happens, but we know it will. And you have to be prepared for it materially and emotionally. That means, but in at the time when it actually happens, you have to be willing to say, okay, this is happening. And when before it happens, when everyone's saying, oh, this can't happen because the dollar is stable now and everything's fine, and this isn't the 1970s, and stop freaking everybody out, you have to know that that's also fantasy. It's nobody knows, but you've got to be ready.
Okay, and after that point occurs, curious what role you see silver actually being used as. How specifically we're using it for money, or do you imagine going back to a barter environment? One of the things that's happened in the past half years, we've seen Costco selling gold and silver, which I don't think is the kind of thing that is going to break down the system overnight. Yet, starting to see something in a place people are familiar with being reintroduced, like you touched on a little bit. I've also wondered if the next bigger wave of inflation we get, where people really start to notice prices going up, similar to what we've seen over the past couple of years, is that another chip away at the armor that really opens people's eyes. But after these things begin to play out, can you describe how you see silver being used, and in what way and what role?
Well, I can only give you a certain angle because I'm like a philosopher, theoretician guy. I'm not involved in the market like Andy is. So hopefully, like we can get together, and I can tell, Andy, I could explain to you what I'm seeing logically, and then you could tell me how it would fit into the market if it went that way. Because I don't understand the logistics of any of this, and you do. But from what I see, at least conceptually, is I see a big pyramid. It's like it's in my head all the time. I wake up and I see it, on my wall. Like that series. What was that series? The Queen's Gambit. And she's playing chess on the ceiling, and she sees these pieces moving, and that's how I
Great
see the
movie, by the
pyramid
way.
all the time, just like reorganizing itself on my wall. And not literally, but basically that's how my mind works, and I see these things. So I'm thinking, okay, so if the dollar is losing value very, very quickly, right? And then all these countries, they have all these dollars, not only dollars, but they have dollar derivatives, right? If the dollar is crashing, very simply, look, if let's say silver is crashing, right? So then SLV goes down, and then options on SLV, short-term options, go way, way down. And AGQ, the 2 times ATF, goes way, way, way down. So the same thing with the dollar and bonds. If the dollar is really crashing in real value and you can't buy anything with it, so what are all these countries with a whole bunch of dollar derivatives bonds going to do? They're going to fall even faster. So they're going to send them all back, and then you're going to have this sudden wave of inflation, or God forbid hyperinflation. It's going to happen. And then what can you go back to? You can't go back to any currency. So you have to go back to silver. So I think for a brief period, I don't think it's going to last very long, but for some amount of time, right, you're going to have to exchange coins for goods and services. You're going to have to take it out of your pocket and give a weight of silver, plop it down on a scale. They're going to have to weigh it and test the coins for a little bit of time, and you're going to have to get stuff that way. And that little bit of time is going to encourage so much silver to come out from people like us to spend as much as we can and whatever we can find, right? Because it's the economy begging for money, for a way to divide labor. So in terms of where the silver merchants come in, what would happen? Like they have all this silver inventory or whatever it is, and then people are looking for silver. So then you just flip the cards. The banks that were trading around fiat, they go broke, and the companies that have all the silver inventory, they become banks, right? It's the same system. It's just flipped. I just don't know how that would actually happen logistically, how it would be possible.
All right, and Andy, anything that you can add to that? Thoughts on if that's what you see playing out, and also any perspective from
I've said the
your side.
exact same thing, just differently for, not in the same words, but the same ideology for 2 years now, that's what happens. The little by little, the logarithmic decay, the chipping away at the hegemony of the dollar, all of these countries that are not Western friendly in the Southern hemisphere, chipping away at the settlement status of the dollar, trading in local currencies, replacing those local currencies with gold and oil in terms of excess reserves that normally would wind up in treasuries. That little by little by little by little, the debasement of the settlement and the reserve status of the dollar is growing much more profoundly. And I think this is a situation where, when you talk about rising prices, look, if you spend $100 every second of every day, 24/7, it would take 1,970 years to print just as many dollars as we've spent in 1 year, over $6 trillion, or created in 1 year. The level of inflation that was created by money creation, the classic definition of it, is exactly what we should be expecting. And that hasn't even flushed its way through the system yet. The debasement, or the falling dollar, is a reflection of the weaponizing of the dollar, is a reflection of the fact that these countries no longer trust us. It's like a glass broken into a million pieces. When you break it, you can't put it back together, at least not very easily. And so what you are seeing is a byproduct of the same time of the ramifications of massive money creation, most of it done over the years where interest rates were near zero, creating huge distortions in asset prices. The end of it is rates were still rising. Well, they were still creating tons and tons and tons of money, which is going to fuel the inflation. And as rates rise, maybe that head towards that stagflation. But the point of it is that I think there's a disconnection now, whereas in years past, everyone wanted dollars, everyone wanted treasuries, everyone wanted to be part of the American system. And that system no longer, I think, is inspiring as many participants as it once were. So yes, I see this exact same way that Rafi does, maybe hyper stagflation, higher prices, higher taxes. What did the knucklehead say? If he wins again, he wants to raise capital gains to 44.5%. He wants to raise income taxes. He wants to impose a mandatory tax on unrealized gains for the very wealthy, higher taxes, higher inflation, little or no economic growth. And I do see a time where the world finally, that all at once moment triggers, and there is a dumping of dollars, there is a dumping of treasuries that accelerates, not just what we've seen slowly and methodically and orderly, where China has gone down to 750 billion from over 2 trillion, almost 3 trillion. That's the little by little by little. The all at once hasn't happened yet. But what I do think, when the all at once happens, it will shock people. Like, to Rafi's point, no one knows that silver is over 30 unless you're in our camp. And it's a very big deal for the people in our camp. Most people wouldn't know a silver dollar if it fell on their foot, or the ramifications of rising silver, what it really means, or massively rising gold and de-dollarization. All of this stuff we focus on, the public is asleep. And so I see the exact same thing: higher prices, higher yields for longer, and continued de-dollarization and de-treasurization that we continue to foster. Where Janet Yellen has the nerve to tell China, if you give 1 penny to Russia to aid their war machine, we're gonna sanction your banks, your companies in Beijing itself. Don't worry that we've given 200 billion to the Ukraine with no congressional oversight. That's our business, and we're the world reserve currency. This is not settling well with the Southern Hemisphere. So yeah, I think that's exactly what will happen now. To your point, what does it look like? Who knows? I mean, yeah, I think it won't last forever, but there could very well be a time where things of value are used to barter, because who's going to want dollars in an environment where no one wants to hold them for any significant amount of time whatsoever? So yeah, I don't know how it all works out. I don't know if the companies like mine become the banks, because quite frankly, what I really see happening is that, Rick Rule keeps saying it, and he said it again the other day. From the Harvard Endowment Fund all the way down to Joe and Jane six-pack, you have a 0.5% allocation. If, pardon my French, the shit hits the fan that bad, which awakens the collective, realization, the collective consciousness that the realization this is real. And if you are not a contrarian, you're destined to be a victim. If that just increases to 5%, that's a tenfold increase. So the ability of a company like mine or this industry to be the bank quickly ends in an environment where, just like anything else in this country, inventory is just in time. And when you run out of available inventory, well, you got to order from the mints, of which 3 of the 5 major mints around, or 4 of the 6 major mints around the world are across the Atlantic Ocean. And so it's not an easy deal to where, you get an awakening by the public real quick. I think everyone's out of product, and it doesn't foster any liquidity moving back and forth. And that's why they say there's no bull market like a metals bull market, because it's the only one where the higher the price goes and the freakier the world gets only solidifies your resolve and your grip on I'm not selling that back for dollars. Are you out of your mind? So yeah, I think it probably wouldn't be a situation where we are the bank, but it would be for a day or two until the public drains everything that's available, and then we're back to square one again.
Rafi, important follow-up question here. Would you know it if Andy Schectman dropped a silver dollar on your foot?
Or a silver helicopter.
Well, actually, yeah. Well, I have been looking over me, at my meals. He was at our dinner party this evening, where helicopters were featured. But let's not talk about that. So would I know that he dropped a silver dollar on me? I'd probably know better if he dropped like a 10-ounce silver bar on my foot. And a silver dollar, I could confuse it. Do I get to look? I don't know. Is it? Do I have to identify it by the pain? I'm not sure I could do that.
Well, if it hits the ground, you might be able to tell by the ting.
Oh yeah. Maybe I could do that. I got to work on that.
Well, hopefully we'll see you back in Florida sometime soon, and we can test out the theory.
Yes, that would be great.
Rafi, actually what sparked this conversation we're having today is that we'll call him Wayne C. from Canada, who is not a public figure in the metals movement, although does one of the people that behind the scenes does a lot to share a lot of good information. And he was asking about that concept that we've talked about before, of whether in that type of environment, a precious metals dealer almost becomes a de facto bank. Andy was pointing out some of the reasons that might be difficult to happen for an extended period of time, but anything that you could share on that, and if that's a helpful way to think about things, or what you see in that side.
All right, so bringing this back to the distilled ether where my head is stuck in, and discussing the ideas of it. So on the day where the dollar doesn't work, right, and then what has to happen, just like what happens in every hyperinflationary country, what happens is they go down one step in the pyramid to the reserve currency, because that's the most liquid thing, right? George Gammon says, he objects, and I understand the objection. He says, I've been to Argentina, and they're not hoarding gold there; they're trading dollars, which is true. That's true. Why is that? Because the dollar still works. Like if you have the choice between gold, but you don't know if anyone, or silver, or you don't know how to weigh it, and the infrastructure there to use it in direct exchange is not there, and nobody really understands it, and the panic really hasn't happened yet. So why would you go into a store with a silver coin? It's like you don't even know if you can get anything. But in a world where the dollar doesn't work, what else can you do? You can't do anything else. There's no choice. It's not like we're headed into a world where people decide with their own minds, like, well, the dollar doesn't work. I guess I will make this academic choice to go to silver and try it in a store. It's not. They're not making a rational, I guess, calculated decision. They're just doing what they know, and what they know when this dollar system doesn't work anymore is that you have to go back to the reptilian part of your economic brain, where economics really started, right? When we became Homo economicus, however many thousands of years ago it was, we traded around gold and silver. That's what we did. So we go to our instincts. We've evolved from people who have used gold and silver in their economic transactions. That's where we come from. That's why we're alive, right? That's it. So we'll go back there. And now I don't know if I wouldn't say that I'm making a suggestion here, but if we're going to assume the reality that the centers of real money in a world where the dollar just doesn't work, and you can't buy anything with it, then the banks will have to become where the centers of silver and gold are, because there's no other option. So if a merchant were to keep a certain level of liquidity, in the background, then you could become a bank on that inventory that you're keeping and just loan it out to wealthy people, and then you start. It's like It's like starting a car on a new engine. It's not easy, but it's going to have to be done for at least temporarily until you can start a new monetary system that's trustworthy.
Okay. And in there, you mentioned about how there will be activity around where the metal actually is, which touches on something Andy mentioned earlier that I would love to get your opinion on. I don't know if I've heard you cover this yet, but obviously we do have the increased premiums in China. Here, this came out about 8 hours ago, and Baijiaojun had 35.30 as the price on the Shanghai Gold Exchange. It was up to 35.88 about an hour ago, so closer to $4 in premium today. What do you make of the elevated premium we've seen on China that has been there for a while now, and how do you think that plays out?
Are you
You
talking to
asking
me or
me?
Andy?
That's to you, Rafi.
Oh, about China? Look, I hear a lot about China. I don't really. The thing is, I wish I could understand what's going on in China, but I can't say because I've never really been there. I don't know what's going on the ground. But if Bai Jiajun is right and the silver stocks are getting lower and lower and lower, then they are probably also worried about their currency. Like, you're in China, you're forced into certain investments. In all Western countries, you are too. Like we're some of our retirement accounts are forced into bonds, and here in Israel, you're forced into national insurance or whatever they want to invest your money in. Everybody's forced to some extent. In China, you're forced into real estate, and if you're forced into real estate, we know what's happening with real estate there in the ghost towns. And now we've seen what's happened with their stock market. If people are losing their yuan purchasing power because their stock portfolio is dying, then they're going to go back to where their history is, and they've been using gold, not longer than the U.S., but they stopped using gold, soon, more recently in the past than Americans did. So they're still more familiar with it, and they might be chasing it, and eventually they will be. And the pace of the sale of treasuries by the Chinese it's pretty big and it's pretty obvious, and it can only speed up because if I were them, I'd want to get rid of every bond that I had and try to get something real, especially if I'm a contender for number one. China
Yeah.
is.
Well, that makes sense, and
Let
perhaps
me add to that just a little bit, Chris, just a little bit, because there was a report that came out recently, and it came out by TD Securities in Canada that said that the Chinese are massively understating the volume or the amount of metal that they actually own. And when you realize that the LBMA, there was a report that in April that the stockpiles held by the LBMA in silver are the second lowest they've ever had on record. It's a 140-year-old exchange. And at the same time, we've talked at length about how both the New York COMEX and the Shanghai are starting to bleed metal precipitously. TD Bank, when talking about the LBMA, said that they're massively overstating as well, not only the positions that they own, but the available volume of metal in the LBMA, because it includes the exchange traded funds that are not broken out. And you got Bullion Vault, and you got SLV in there, and other things that's encumbered. And so they're down to their lowest level ever, which means that you have the industrial users are relying on going directly disintermediating the miners, and they typically rely on the miners for supply, and so they have to seek outlets, I think, by draining the inventories. You're seeing that the inventories are being completely and totally drained, and I think China maybe realizes that, so they're trying to turn up the arbitrage spigot by putting silver almost $4 higher, so that the traders who do have the ability to purchase in the West are able to do so and deliver in Shanghai, those that have that ability. And there's been a lot of talk lately about the exchange for physical, in terms of all of the exchange for physicals being sent to brings Hong Kong, which is a COMEX facility. Huge amounts of gold kilobars in particular, large amounts of kilobars that are leaving the Western vaults. It's the mini contract on COMEX and is being delivered in exchange for physical off, in the OTC market, really. And then the theory is they're being trucked directly from Hong Kong to the Shanghai Gold Exchange. So they are trying any way that they can to accumulate whatever they can, whether it be by exchange for physical, whether it be by taking whatever they can out of the LBMA, whether it be taking whatever they can out of the COMEX, whether it be backdooring the ETFs. And I think now what they're trying to do is arbitrage. That $2 premium became $3 and now is almost $4. They're turning up the heat to attract as much arbitrage as possible. I think they think very shrewdly, cunningly. They are 2-3 steps ahead of the game. And to me, that's what that really symbolizes. When you see Shanghai Metals Exchange, which in terms of volume, when you add the Shanghai Metals Exchange and the Shanghai Futures Exchange, the average daily volume is greater than the COMEX now. It is effectively the number 2 largest center in the world for trading metals behind the LBMA. And so, yeah, I think that's exactly what you're seeing. You're seeing the industrials freak out and they realize, man, it's getting hard to get, and they're trying to get all they can. And the Chinese are doing the exact same thing. There's this battle, if you will, between the industrials and the investors, or the industrials and the accumulators. And I think ultimately that's what will happen. There will be a battle between the companies who need it to survive and the countries or the investors or the sovereign wealth funds or the central banks who think they need it to prosper and advance. And I think that battle is happening right now in front of us. It just, no one's really talking about it. But that to me is exactly what's happening. And that's why you see arbitrage going higher, because they figure, well, if we can't bleed the exchanges, if there's too much competition, let's just crank up the heat. And all the traders who can buy in the West and deliver in the East will do just that. So I don't expect that to change. In fact, I wouldn't be surprised if ultimately we wake up one day and see, the exchanges in Dubai, in Shanghai, and in Moscow buying silver at $50 an ounce and buying gold at 3,000 an ounce. And just like that, everyone who's stupid enough to pry free what is available to be pried free will do so, will arbitrage it, and never coming back. I've been saying this for a long time. The difference is the people in the West here have a very short time frame. The instant gratification is not fast enough, and the Chinese, for whatever their shortcomings, they are very strategic, and they do things in a very methodical, regimented fashion. And that's, to me, what this is. And it's a trend that has not gone lower, but is only going higher. And interestingly enough, mostly in silver. The arbitrage with gold isn't that great. What did he say gold was at today? Our friend, the ghost. He says it's at 24.68. Well, what do we got spot at right now? 24.30. So they got a $40 spread right now in gold, but a $4 spread in silver on a percentage basis is massive. So yeah, I think this is something we will continue to see happening. It's their way of accumulating whatever they can possibly get, but not fast enough to wake everyone up. What? The Chinese are paying what for silver? But just enough so that every time I say this and quote this, people say on other podcasts, where are you finding that information? Where do you find that information? And this guy, what's his name again, Chris? How do I pronounce his name?
Bai Zhaojun.
Yeah, I don't speak Chinese very well, but
Oriental_ghost on Twitter, and a great follow for.
It is. He's awesome. I get so much info from him. He publishes it every day, but you can't find it anywhere else, not easily. And so this is what I mean by slowly turning up the heat, not to cut off their nose to spite their face, but they're doing a damn good job of siphoning off what is available at in this case, a 15% premium to the Western price.
Andy, that's why you got to tune into the Tuesday weekly physical silver report, because that is the kind of place that you can find it. And Rafi, I think you'll like this one. Andy, since premiums are still high in China, I know that they're lower on coins in the US. So what do you have on special for us this week, sir?
Good question. Every time you ask me that, I'm never ready for it. So give me 10 seconds and I'll tell you what it is. In the silver universe, we have today 1/2 ounce Canadian polar bears which are very cool from a barter standpoint. If we're going back to that barter discussion, they are half-ounce coins made by the RCM. They're 4.9 fine. They come in boxes of 240 coins. So 120 ounces, really, really great for barter. $2.50 over their melt value. We also have 1 ounce Krugerrands gold at $49 over spot. So right now, that's all we have on silver. We probably still have some of the 2023 silver Krugerrands that we've had on special for 2 weeks, but I bought everything that was available. I bought as many as I possibly could. We've sold an awful lot of them. So to my knowledge right now, oh, I take that back. There is still the Krugerrands at 310 over spot. The 2023 silver Krugerrands at 310 over spot, along with the half-ounce polar bears. The best thing I've seen to barter with outside of junk silver, because they're the only sovereign mint that I know of that makes half-ounce coins that aren't ridiculously expensive. So it works out to $5 over spot, but it's $2.50 over melt on each coin. And for 120 ounces, it's a great buy.
Wait, so Andy, I have one question. Are they backed by real polar bears?
Yeah, yeah, exactly. You can trade them in for a real polar bear. Each box. Well, you too can have your own polar bears sent to your home in Miami or wherever you may be. And yeah, they don't do well in warm weather though.
Oh, okay. I'll keep that in mind.
Yeah.
Well, you can find out more about polar bears, silver, or premiums, or if you're interested in purchasing silver or gold, Arcadia at milesfranklin.com. And we're going to begin wrapping up here for today. Although, Andy, I thank you for joining us and allowing Rafi into the call.
Oh, dude, you kidding me? It's an honor to be in the same room with Rafi and you. And I would do it every week if we could. It's an honor.
Yeah.
Honor to you too.
And I might add, we can find Rafi at endgameinvestor.substack.com. And fortunately, Rafi is kind enough to do a video every Friday on the Arcadia channel as well. So, Rafi, thanks for making some time, and you take good care of yourself out there, and hope everybody at home is having a nice afternoon, and we will see you again soon.
Bye, everybody.
Yeah, I got to go back to my dinner party. I'm excited. Okay.
Well, thank you to Andy and Rafi for today's call. Certainly nice to have both of them together, and hopefully you found that one helpful at home. And hopefully you're enjoying the silver rally. I've been thinking about it quite a bit lately, and this is really only the third time, aside from a brief moment in 2011 where we've seen silver above $30. Obviously, we know what happened the last two times, which is not to say that that will be in our immediate future, but some nice things to think about. Hope you're celebrating and enjoying it. And before we wrap up, I did want to thank First Majestic Silver, who brought us today's show. And one of the notes that I've been thinking about is that in the first quarter, they had a 23.72 realized silver price. And certainly as we look today, where we're at $32, gold at 2,400, which would certainly help as they are restructuring their plans at Jarrett Canyon, having the higher gold price, and First Majestic set to benefit from a much higher silver price in the second quarter. So certainly good news for them. And also, of course, they do have their bullion store open now, which you can find by going to firstmint.com. And it will be nice to see that they're selling silver direct at the higher prices as well. So thanks again to First Majestic for bringing us today's show. Go have a great day out there, and we'll see you again tomorrow.